Hey everyone, thanks for tuning in. We're back here with Naveen Chopra.
Thanks for having me again, Michael.
Nav, great to have you back. And I know you wanted to take advantage of an opportunity because a lot of people since our last video have been asking you about pre-construction.
Yeah.
So we're going to take this opportunity to unlock the potential of pre-construction in this video. Read over some notes you made.
Yep.
Some things I agree with, some things I don't. We're going to go through it.
Sure.
We're going to challenge things perfectly.
Perfect.
And
We love a
we'll let the
challenge.
viewers decide what they want to use. And then they can call us both and pick both of our brains if they want.
Amazing.
Okay, so let's get into it. Pre-construction. So, it's November.
16.
Okay, so it is November 2023. And to recap the year, interest rates hikes, I guess over the last more than a year, but just say a year. November to November, interest rate hikes. In the pre-construction game, we've seen definitely sales drop.
Pre-construction and resale everywhere.
Pre-construction
and hopefully
resale.
we're at the end of the hikes.
Hopefully, but you know what?
There's always light at the end of the tunnel.
It's funny that you said that. I have a definition of hope here, which we'll get to, okay? And I wrote it down while I was waiting for you because I wanted to understand, I always find it hard to try to get people to understand what the difference between investing and speculating is, okay?
Yeah, for sure.
And they are different.
Definitely.
Okay? That's why there's two terms for it. So in the market, you're either a speculator or an investor. Now, are you both or you're not? We'll get into it and we'll see what people define it as. But for the last year, interest rates have really hurt closings.
Yep.
Have really influenced if people are
Appraisals.
appraisals, close their units, how the flippings work. You know, people buying a property years ago and selling them now. We've got so many stories going on right now.
The speculators. Like
The
you said.
speculators, right? or you know what, circumstances change too. For
Yeah,
some people.
someone might have been planning on investing, as I always say, when talking investing since we got on it, to me that's long term.
Long term, okay.
Speculating short term and expecting a quick flip or never even planning to.
Okay, let's get right
Close.
into that.
So
Then,
you
okay,
can- yeah,
Let's
let's
get right into
dive
my
in.
definitions that I found. 'Cause I'm
Let's-
kind of, and I
let's
took
put
these.
them out
Look,
there.
I took these off a basic Google definition. Right, I
Sure.
went in and I go, you know what? I was reading your comments and I go, let me see if I can define this properly. Okay, let's just get into it. An investor. The definition of investor is a person or organization that puts money into a financial plans, property, etc., with the expectation of achieving a profit. Okay? So then I want to step further. And actually, before I answer what expectation means, I want to go on to speculator definition. Okay? And a speculator definition is a person who invests in stocks, property, or other ventures in the hope of making a profit. So we have investors with the expectation of achieving a profit, and a speculator is in the hope of making a profit. Okay? So then I went and said, what's the difference between expectation and hope? Right? Because we have to define these things.
Yeah.
These things, there's reasons why there's words and definitions. So an expectation on the investor side is a strong belief that things will or should be a certain way. Mm-hmm. A hope is, on the speculator side, is a desire for an outcome, a wish with some uncertainty about what will actually transpire. So a wish and a desire is speculator.
Yeah.
Which is cool to understand, right? So I guess you could say the investor is someone who, or is the person who actually puts forth some knowledge, some wisdom, some study, understanding their position.
Yeah.
And the speculator is more of hopes and wishes, dreams, maybe.
A little bit more of a gamble.
Gambling.
Yeah.
Gambling.
So, an investor could end up being a speculator. Where investor, so I always love investors as I think long term. In real estate terms, you're gonna buy a property with the intention to close it, hold on to it, rent it out to
Long-term
a
rental.
long term. Now you could become a speculator. Let's say you bought in 2016, profits were enormous when you closed in 2020, and you said, hey, I'm gonna assign the property. I don't need to close it. The money I thought I was gonna make long term, I already made short term. So,
Yeah,
hey,
makes sense.
great investment.
I could put it in something else.
I can now become a speculator because it came true. This
Well, you didn't
wish,
have-
this hope.
You didn't buy on speculation.
I didn't buy on
You buy on
speculation.
investing.
I bought on investment, but the speculation side of it turned out great. So, you know what, call me a speculator now because I'm out. I made the profit that I thought I was going to make in 10 years, in 4 years, or even before I close.
100%.
Yeah.
And the risk, because I know here we put flipping properties as a speculator form. Okay, so
Yeah.
we're going to say that investing is to hold, to rent out, to generate income.
Yes.
Okay, hopefully positive. cash
Investing
flow, but-
is, to me, is you're going to close and hold on to the property long term, and you have the means to do that if you need to.
And speculating would be the flip.
The flip,
Let's wait
the
till it goes up.
assignment. So pre-construction, if we're talking pre-construction, it's I'm gonna not close on this property in 4 to 5 years from now when it's time for closing. Instead of doing that, I'm gonna assign the property and make a profit.
Or worst comes to worst, you close and you sell it after. You have additional costs, but
Yeah, but then I take you into that investor category.
well, you're still
because you
flipping
have
it
the
if it's instant.
capabilities of closing
That's
and
true,
carrying
too.
it.
That's true,
right?
too.
So if you go on the capability of, hey, if it doesn't all go to plan, I will close and move forward, you're now an investor because you're willing to hold out if it doesn't work out. The speculator where I get turned off by that is, yeah, I can't close this property. If it comes to time,
that's a gamble.
and that's what I call a speculator.
So I had put this in here, flexibility. Okay, so the speculator with flexibility becomes the investor.
Yes.
So for example, you buy a property with the intention to flip, close and rent out, or live in it.
Mm-hmm.
And if you have 3 options and you're flexible in those 3 options, you have hedges against outcomes.
Now I call you a seasoned investor.
Right.
You know what you're doing. You have 3
But
options.
if you just speculate, if you just say, I'm buying today because one day I think it's going to be worth more, I wish and desire
and I can't
it to be
close it.
worth more.
If I have to, I can't.
Can't
I'm
close it.
Or I'm not prepared to because I just think, hey, the market's heading one way. I'm going to make money no matter what. 4 years pass, I'm going to assign and walk away and not close, nor am I prepared to close or took any steps in that direction.
Okay.
And now you could get in trouble, right? If the market is
Well, let's
not,
look at what's happened over the last 3-4 years. Okay.
is what it is now.
And I know lots of people, and I was telling this, I was talking to many of my colleagues and friends who were buying these condos back in 2018, 2019, 2017. Okay. Yeah. And I bought one too.
Yeah.
Okay. Now, look, I love real estate. So you buy and it's gonna, we've got a flourishing market. Things are gonna happen, but again, you have to have that hedge. And now what happened? Okay, so we're turning around and we're closing, say for example, Charisma Condos now. It's about to close. And that's a development in Vaughan, Vaughan Mills. It's Jane and Rutherford. And it's about to close on its first two towers.
Yeah.
So phase 1. And phase 1 initiated in September of 2017. And I had bought at that time in the first tower. Okay, and now they're starting to close. So 2017, 2023, it's a lot of years.
Yep.
Right? So imagine people bought 1 or 2 units, some friends I have or some colleagues. They bought 1 or 2 units, and back then they were thinking, oh, they're gonna make a killing. Hey, it's gonna go up. We went from $650 a square foot, 700 a square foot, not even, to 1,000 a square foot by a year ago, less than a year ago.
Yeah.
Okay. And that's on assignment. We were selling them for $950, 1,000 a square foot.
Yeah, they were there. It's not like it didn't happen.
They
It was
hit,
there. The price hit that.
Yeah, it hit that. So, and some people sold it at close to those prices.
Yeah.
But now we start seeing differences. Now we start seeing higher interest rates, which is triple what it was a year
your
ago.
payments.
Or back in 2017, 2018.
Yep.
We have triple the interest, and what happens with those speculators in the building? They're flipped, they can't close. Well, they're giving them away for what they paid for them, some of them.
Some lower.
Some, yeah.
You don't want the...
There's not many that have gone too low.
There
They're
hasn't.
still at break even, like
Because
the
the
lowest.
prices from 2017, you're capable
That's
of that.
massive.
Now, if you bought
In
into
2019,
2019, and
no, you'll have a loss.
you're probably losing.
Yeah, you'll have a loss. But those haven't.
Or you better have a
those units
location.
aren't built yet, so
Exactly.
we still have
Some are.
a year.
Some are.
Some are
quick builds.
Some are, yeah. Some are. In this particular level, no. So again, the speculator that had desired or wanted these prices to go up and wanted the whole scenario where they make a killing have watched themselves diminish returns from
Well, they seen an up and down, right?
up and down.
Yeah. But like the market does go up and down, ends up up. But there is going to be dips. And that's why I like the investor better. Because you don't want to fall in that dip and now have to flip. Like you're losing. Even if you're selling at what you bought, you're losing. You invested your deposit of 20%, 15%
Right.
over those 4 years,
Right.
5 years. You're paying a realtor, real estate fees. You're paying a lawyer. Even if you're selling it at the price you bought,
You
you
lose money.
lost.
Yeah,
You
you
lost
lose
on your
money. You have to take
deposit. You
a
lost
chunk
on
more.
fees.
You're
down.
about what, 5% in commissions,
Yep.
and whatever other costs. You're looking at 6%,
Lawyer costs,
7%,
and then interest on that money you could have made elsewhere.
Yeah.
Over those 5 years, 20% of 500,000
So just
at
to
a
break
minimum.
even, this is a good one. Just to break even on a transaction, you have to get, after you purchased it, you got to get about 7% more.
Yeah. To be fair.
To be fair, yeah.
Yeah.
In order to break even.
Maybe even up to 10,
up
depending
to
on the
10,
purchase
yeah.
price. If the purchase price was lower, you might need a little bit bigger of a percentage to cover, right?
Yeah. So let's say 7 to 10%, just to break even.
Just a break.
So break even is point is 10% plus. I think we're going to
Take that
forget
into
to count
factor.
inflation. I think we'll leave it out because of the short gap. Okay, so 1 year or like 4 years worth of inflation is marginal on a 20-year more or
It's
10-year.
we were at 3%, 5%, 7%. It adds up.
It adds up.
You got to remember, it adds up. And those prices that did increase, like all those increases we've seen, inflation had a lot to do with it.
But how do we feel that dollar value? How do we feel that inflation value really affect us? It's very hard to feel until it gets to a certain point. So
Yeah.
that's
I mean,
you
we're
know,
feeling our regular costs around,
we're,
around
costs
the
are
globe.
extremely high.
Yeah.
So
Overall, you're at a loss when you sell for even.
okay.
Right?
So
it's not even anymore.
So to touch more on what we're talking about, speculating, investing. One thing has become really common in both when you study the history of financial markets, the history of real estate, you can't predict anything.
No.
There's no predicting.
No.
So there's no way to study what's going to happen tomorrow. There's only a way to study what's happened before.
Well, you could follow trends, but can you predict what's going to happen? No, but that's why we like long term, because if you
Right.
follow the trend of real estate market over the past 100 years, if it's not straight, but it does head up. So there's dips in between, but the value is always headed in one direction.
Is this video for the investor or the speculator?
I would say
Or
more
both.
for the investor and
More for the
a
investor,
warning
okay.
maybe to the speculator.
Yeah, okay, so-
hey, stop speculating. You can do it. If you do it and get lucky while you're investing, take advantage of it. You can get your money out quick, but don't put your money in and just speculate, because there are dips, and like we're
There's
learning
dangers,
today,
yeah.
it's a dangerous way to lose your hard-earned money.
I guess both of us being real estate agents and brokers is that we can't say no to someone if they want to buy something on a flip.
No, like it.
We can advise them. We can share with them. But we
And
can't make
if-
decisions for them.
We can. And if for the last 10 years, from 2009 to 2021,
Yeah, it's
if
been
I
crazy.
advised my clients not to do so,
You'd be wrong.
they would have hated me. I
Yeah.
would have been wrong
You
too,
would've been
yeah.
wrong, yeah.
Am I wrong in warning them? No.
No, your job is to advise.
Yeah. And there would have been a good.
and consult.
Between the 10 years, there would have been a couple of times where you're wrong. Like there was ups and
Of
downs
course.
again, right?
Again,
you
as a
got hit
speculator-
at the top of the market in 2017, and you're speculating, and 2 years later it came to close. You may have caught up, you may not have. It did end up back a couple years later going even higher, but you could have got caught in the middle, and people
Well,
did.
that's what I say to people all the time on speculation is you never know that it's going to be up or your investment is going to be higher when you need the money, when you want to take it out.
Exactly.
So here we are, you invest and you're up. You got 2 years, you've been climbing at 30% or 20%, and all of a sudden, you got to go close or you need to sell now, and interest rates went up.
And it went down.
And it went
Yeah.
down.
If you
Sentiment,
sold in the
consumer
middle,
sentiment went down. There's a huge ton of inventory. Things aren't selling as quickly, and now you've lost your gain. And here, if you would have sold it last year, when you didn't need the money, when you were up, but you thought, hey, it's going to keep going.
yeah. Which could segment over to now. Everyone is feeling the same, right? It's not going to stop going up. Buy. Everyone's
Yeah,
throwing
that
their
doesn't-
textbooks at everything.
Yeah.
And then now you're in the dip, and it's the complete opposite. Now is probably the right time to buy. Take advantage of pre-construction
so-
prices, but everyone's now holding on to their checkbooks and saying, no, I don't want to buy now.
Okay,
but
so
hey,
this gets
prices
into-
are down. Buy now.
You're right. You're not
Why are
wrong.
you doing complete opposite?
The
of,
problem is people are going to watch this video, and they're going to say, here are two real estate agents talking and telling people to buy. So that conflict, I guess, exists, or that bias in people's mind that, obviously they're going to say buy in the market because they want people to buy. But the truth is when I hear people say, what is a deal? Or I'm looking for a deal, okay? So when we do our prospecting phone calls, okay, and we call people, and we say, hey, are you looking to buy real estate? Yeah, but I'm looking for a deal, okay? And how are you looking for this deal, okay? Because deals are found now in this kind of market.
Oh, they're everywhere.
In this, where people are fearful, where people are spread thin, where less people can afford a spot, there's more opportunity.
Where builders have to make end goals, as into percentage of sold, to get their financing. They are giving you incentives to get themselves there.
This is the first time
take advantage of those.
15 years that the builder will listen to you. That they'll actually take what you say and say, you know what, we might as well sell this unit.
Yeah.
Give them an offer.
And what incentive will it take your client
to get it done?
To get there.
To get it done.
And they'll listen.
Whereas in the highest point of the market, their phones, they don't even answer their phone.
No, you're lucky if you could get your client.
Because they're going to say, don't worry, we'll sell it to someone else.
Exactly.
So what is a deal? Which was pretty cool because, it's funny, people say, if I see a deal, I'll buy it. But, I started thinking in product innovation, when we see a deal, say, for example, Adidas is having a deal.
Yeah.
And we get those a lot, those Adidas discounts at Highway 27, right?
Yeah, you see them
those
all the time, the
ones,
promos,
right?
yeah.
So you go in and you say, you finally get this flyer, or you hear from someone there's a deal going on, you get in there, they don't have your size. They're all sold out. And my point is that if you wait for the deal to come to you, if you wait to be privy from neighbors or everybody about this deal,
you might
there
be
is
too
no
late.
Deal.
Yeah,
There's
it's
no-
already taken
the deal's
advantage
gone.
of. Yeah.
Whereas
You're at the tail end of it.
Whereas there are properties in current developments in Vaughan, okay, between Highway 7 with the condo spots, Highway 7 in Jane and Rutherford and Jane, where 2-bedroom units that were even $950 a square foot or $920 a square foot are selling for $780 a square foot.
Deal.
Because people can't close.
It's a deal.
That's a deal.
Yeah, if you're telling me in 2021 it was 1,000 a square foot and now it's 800 a square foot, to me it's a deal.
That's a deal.
It's 20%.
Well, it's also got to work out in the costs associated with interest rates and stuff like that for your.
But
at the end of the day,
depending on closing, now this is where I'll start speculating again. If closings 2025, 26, 27 or further on, and what the economists are saying and the banks are saying, and they're speculating that by then interest rates are going to be dropping, am I worried about that interest rate anymore?
Well, can't answer that because I don't look at the future and guess. So
Yeah, you can't guess.
I don't know if I can
but
believe them either.
Are you willing to take that chance? Are we seeing the bond rates go down? Are we seeing
I look at it like this. I look at it
interest
like
rates
this.
flatlined?
These people selling, the people selling at this discounted rate, or because they have to liquidate, they have to get out, they have to get their money back. That doesn't necessarily mean that the whole market's coming down. That's just a few people who couldn't afford to close.
Yes.
Whereas that doesn't really bring prices down. So for example, if there's a sale on a resale property and it's on a beautiful street and a house sold for $1.5 million and the next one sold for $1.2 million now because things have changed, that doesn't make the next house worth $1.1 million.
No, that person may, and it doesn't make the next house worth $1 million too, because that person may be in a completely different.
We have to
state.
take into account the house, the community.
Someone may have to sell because they already bought.
Of course.
Someone else may be selling because they want to sell now, and now they can buy something, but they're not willing to take a low offer on it, right?
So that's where I see the deal.
Yeah.
I don't see if everybody's coming down and everybody's selling for cost of what they then there's really not much of a deal because the market's
that's just market
at equilibrium,
exactly.
right?
Exactly.
But if only one or two people are coming down, these are the deals.
Yeah.
Now then some people turn around and say, well, Mike, why don't you buy it if it's such a good deal? Well, I have my own investment strategy. It's not just to turn around and say because I see something that's attractive, I'm going to go get it.
Yeah.
It has to go through a rigorous, investment principles that I have. Maybe
me,
my cash is tied up right now.
Yeah, for me, I'll be honest. I have closings coming up, and I would love for have not bought that condo in 2019 and had that sitting in my bank. Yeah, I'll go buy one right now.
The same condo I bought
For
2
sure.
years ago, I could buy a one-door garage, a detached home right now.
Exactly. So yeah, I would do it. I would do it if I have that disposable deposit money.
Or if it
sitting
was
in my
within the
account.
principles of what you were looking for.
Yeah, 100%.
Yeah. So, at the same time, we're not going to stray away from our investment ideas, principles, and our normal practices just because something looks cheap.
No.
We still have to do our due diligence. But the whole
Yeah.
point was, when do you find a deal? Well, you don't find it when you feel comfortable. You don't find it when you're like, okay, the market's doing amazing, everybody's perfect, I gotta buy now because
You're
everybody
not
else is
getting
doing
into
it.
You're throwing
doesn't work like
offers
that.
like everyone, right?
Exactly.
20, 30 offers at one property.
Exactly.
A building releases for pre-construction. There's a lineup of 1,000 people. You're lucky if you get in. On to the next one, the next phase where they raise 10 to 20% already.
So now's a great time to buy for some people.
Yeah, but the unfortunate part is when things are going up, people will keep buying.
Yeah.
And when things are going down, everyone's waiting for the bottom, but no one knows where the bottom is.
Right.
So like
That's
you said,
speculating.
if you see what to you seems like a deal, get in. If you could do it.
I think you have to know your principles first before you recognize the deal. You
Yeah.
need to know what.
And that's why I said
You need
for
to-
you.
Right, for you,
If
yes.
it seems like a deal to you,
Right.
go for it.
So I guess rule number one in investing in real estate is have your principles.
Yeah.
Know your strategies. Know what your minimums are, what your deal looks like, what your overpriced property looks like.
Yep.
Look where you lose money, look where you make money, look where you find a steal. And if you have those principles and that investment plan, as things come up your way, you can measure them and say, this is great, this is not going to make me money,
Exactly.
this thing's guaranteed not to lose me money. You may not have a guarantee on making money, but you may have a guarantee not to lose money, and now you can rent it
Yeah.
out and make some income.
Exactly. Or I did buy it for people in the past now that are closing today, but always had the plan on closing and had the means to close of, I'm going to close and I'm going to wait this out because
Yeah.
long term,
Yeah.
it's going to come back. I might lose a couple of hundred a month for 1 year or 2 years as I close my property now rather than giving it away at a loss or even that we discussed as a loss.
Yeah.
And hold on, and that's where that long term comes into advantage over speculators, right? Now I could close and wait it out.
Yeah. It may be a cliche to do, but I've read a few books, but one I read that really stood out was, and it took me a few times to really get to it, 'cause it's a pretty thick book, and it's The Intelligent Investor by Benjamin Graham. Mm-hmm. And I follow a lot of really wealthy people, business owners, and I read financial statements,
Yeah.
publicly traded companies, and Warren Buffett's one of those guys, and he was a student of Benjamin Graham. And this book, it's called The Intelligent Investor because it pretty much, it touches on investing principles, it touches on investments.
Interesting.
But what it mostly touches on is temperament, the person, okay, and expectations, which is really cool because not a lot of books really go on that. They all tell you to get rich or how to make as much money as possible
Yeah.
or how to take risks. This one's really cool on expectations and temperament, but and it touches on other people's emotions and what people go through in behavior and through market swings, the fearful and the excited.
Yeah.
When people are excited and everybody's talking about it, it's pretty much too late. When people are afraid, now's the time to start looking at opportunities where people are going to be hurt or
Take advantage.
Well, you're not taking advantage of people.
Not
you're taking
of
advantage
people, of the opportunity.
Exactly. I want
Of
to
the
clear that up.
opportunity.
But-
Don't take advantage of
But the book's really good. And what else I did was I was curious to know on this. I did another one of my surveys on people, and I just asked random people, business owners.
Yeah.
And I even asked a gentleman born 1954, 69 years old.
Okay.
And I met him on vacation. He was a mining investor, and he had done this for years. He IPOs mining companies. And I thought it was interesting, but as I'm talking to these investors, okay, I asked them about this book, and I asked them, how many people have read this book? Not many have read this book. And it's funny because I find that the get-rich-quick stuff, even on YouTube, is watched millions of times. You go watch how to get rich in real estate video, there's a million views. But you go watch something on real human behavior or prediction or something about the market that doesn't say get rich quick, there's only thousands of views.
Yeah, good. I'm just thinking in my head right now, if someone says, if you're young, you're naive, you're looking at something and someone says get rich quick, or you see another video that actually
They're
says
catchy.
get rich in 5 to 10 years, which one are you going to click on?
Exactly.
Get rich quick. I don't want to wait the right one is probably the 5 to 10 years.
Yeah.
Because it's going to give you a real strategy and something that's probably a little bit more fail-safe, right? Long term, like
Yeah.
we said, investing should be long term. It shouldn't be
Should be
speculating,
long-term,
and
yeah.
it shouldn't be get rich quick.
So anyways, this book is really good. If anybody wants to read it, you'll really enjoy it. You'll enjoy it on the basis of investing, on the basis of protecting yourself, and understanding the psychology and behavior around investing and how things work.